Hi, everyone. Today I want to talk to you about a couple little parts of the contract that we don't touch on very often. Agents kind of gloss over them a lot of the times and just don't think about it because it's just so normal for things to go pretty smoothly. Or when things go badly, the lender takes care of it on these things. It's Section 2. It's the financing section of the contract. I do want to start with the first part, though, which is Section 1D, which covers the close of escrow. And line 29 there is where all of the problems start for people on losing their earnest money, or at least earnest money being in doubt when something doesn't close or doesn't close on time, and the lender has to send a cancellation letter. So let me just start by reading to you this section on line 29. The buyer acknowledges that failure to pay the required closing funds by the scheduled COE, if not cured after cure notice is delivered pursuant to Section 7A, shall be construed as a material breach of this contract, and the earnest money shall be subject to forfeit. So that really does mean that if you don't have the money and don't pay the money on close of escrow day, you're going to lose your earnest money, or at least you're going to have the chance of losing your earnest money. You'll get your chance to have your say. But the contract's pretty clear that if you don't and you don't do it, it doesn't, you're not going to get it back. Let me bring up the next part of this, and that's section 2. And what I'm going to do is I'm going to share my screen so you can read this along with me. There we go. Sorry, it took me a little bit longer than I meant for it to. So we're at section 2 of the contract. We're at line 83, section 2D. And this doesn't sound like the place you would find this, but this is exactly where it belongs when you read the full contract. Interest rate / necessary funds. What happens occasionally that triggers this is the buyer won't lock in their rate quick enough to make sure that they have the funds to close, because it'll change the ratio, either the front end or the back end ratio, because the interest rate will change enough to move the payment. That's not been an issue since interest rates have been, historically low for years right now, but that'll come back. But what still comes into play, and let me highlight it for you: the failure to have the down payment or other funds due from buyer necessary to obtain loan approval without conditions and close the transaction is not an unfulfilled loan contingency. Where you'll see this come into play quite often is if the buyer uh, spends some of their reserve money, and that's not an unfulfilled loan contingency. You still have to have the reserves. It changes your interest rate, which changes the payment available, which makes the loan undoable. But it is because the seller, or excuse me, because the buyer had done something wrong. Another thing that happens here is, especially with this COVID going around, is, or having gone around so badly and everything being shut down, the buyer will get a pre-approval. The pre-approval will go through the 12 months worth of income. They'll do the things they're supposed to do on that. And when it comes to that final underwriter, the final underwriter is going to come in and say, hey, wait a minute, with the industry this person works in, we really want to see 24 months of income and see what happened when everything shut down and see if they really are viable. And what happens there often, and it's happening fairly regularly, so you have to be careful to be on top of your lender. What's happening is the required down payment goes up, because if they didn't work during that last year, if during 2020 their income went down, what they're going to qualify for is going to go down. If they have to pay more down payment to make that up, that's going to change their ratios, and they may or may not be able to perform on the loan. That is not, at least in my opinion, problem for the buyer. That is one where the initial lender looked at it and gave us a pre-qualification based on the 12 months of income. The underwriter went back and said, hey, I want to see 24 months, and the numbers didn't add up that time. If that happens, make sure that if you get a loan denial letter, that they explain that very, very clearly. When you see one come back for interest rate / necessary funds not available, talk to the lender and say, hey, why is this? Because occasionally their automated system is just going to spit out this thing that says they don't have necessary funds. It's a code and it just spits out those words. But what we need is it to explain what that actually means. Because if what happens is they did look back further in time, the underwriter wanted to see further back than was initially needed, then it's really no fault of the buyers, and the buyer really should get their earnest money back. If, on the other hand, somebody had said, yeah, I made the same money last year as I did this year, and they go back and look, yeah, that might be a little different, but typically that doesn't happen. Usually the lender looks at 12 months and then something happens and makes the underwriter want to look at 24. So that's just warning you to be on top of things, and to know that not having the cash to close is not an unfulfilled loan contingency. Another thing that comes up is somebody will have money in the bank and they will say, yeah, I've got $50,000 to put down. If they take that full $50,000 out, it changes their ratios again, and they don't have the reserve funds, and that gets them a loan denial. That's probably on the buyer. That's probably one where the buyer is going to lose their earnest money, or at least have it more at risk. Another one is they say, yes, I've got all kinds of money available. I just have to take out like my 401k, and they never bother to get that money moved around. And suddenly it's closed of escrow day and they can't write a check. Well, that is definitely on the buyer, and that's going to trigger the failure to have the down payment or other funds due clause in the contract here. So if you have questions about this, don't hesitate to reach out to me, 602-400-4376. I know this is a tricky thing for some people sometimes. Often what will happen is we'll be going through our transaction and something like this will come up, and we'll just sort of react in this sort of freak out mode. And let's be careful about that. When things like this come up, call your broker, talk to them, see if there's some way to make sure that everything gets handled the right way. All right. Again, if you have any questions, call me 602-400-4376. Thank you.